I think we and most folks thought that we would see some slowdown in employment growth this year. And right now we have seen that, but certainly the print today is certainly consistent with a healthy labor market. There were some downward revisions, but the labor market has held up quite well. And so I think, so far, so good. Of course, the big factor is not just the tariffs, but the uncertainty about the tariffs. But as you mentioned in your earlier segment, markets seem to absorb that quite well since Liberation Day.
Richard, earlier in the week, there was this thread that started to get spun that we were entering a period where it was hitting the hard data, some of the weakness, whether that was construction spending or the revisions to Q1 consumption or claims maybe. Do you think that's a bit premature?
I think it is. If you look at overall flow of data, I think it's coming in about as expected. In fact, if anything, some of the tracking for second quarter GDP is really eye-popping. I think Atlanta Fed earlier this week had something like 4% growth in the second quarter. So I think the data has been mixed, but really coming in pretty solid. As have you look also at spending as well as income gains and holding in well, I'd say.
We're going to just leave it at that. So he's even painting a picture that isn't so gloomy. So, but again, you have to realize mainstream media needs you to view and click and things like that to get your attention. I'm just here to provide you the information. That's why I love picking like one video each day to help share with you guys so you can understand the markets a little bit and actually hopefully validate a lot of the things that I'm telling you. So that's what we're seeing right through at this point. So the Federal Reserve, they're going to be meeting. Where did I put that in here? The CME Fed Watch. Let's go over to the C. When the Federal Reserve is going to be meeting. They're going to be meeting in 11 days. We looked at this earlier. Let's see if any of these numbers changed after we got that jobs print from this morning. So we'll go back to here. This number was 99. It's still the same. So there is a 99.999999 chance that the Federal Reserve is going to do nothing at the next meeting. Now, the meeting after that, that's where I'm like, okay, we need some data to come in from there, because if you have the jobs market staying steady, you have inflation in check, and you get a lot of agreements on these tariffs that aren't as inflationary as a lot of people think, I think you're going to get a lot of good reactions in the market in the coming weeks and months. So let's get over to my short-term, mid-term, and long-term views on all this. But first off, let me tell you who I am and what I do. My name is Dan Frio. I'm actually a federally licensed mortgage loan officer, so I'm licensed in all 50 states as well as Puerto Rico. Our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Well, I work at a federal bank. Yeah, I'm a federally licensed loan officer, so I work at a federal bank. But our bank that I work with